Now we're going to talk about the statement of changes in equity. So this is a second statement that we have to do. So essentially, it shows the changes in each component of shareholders' equity for the period. Remember, we have three components. We have common shares, preferred shares, and retained earnings. However, common shares and preferred shares can be input into one component called share capital. So share capital is amounts contributed by shareholders. So they're contributing cash or even other assets such as land building into the business for ownership stake. So it may include common and preferred classes or shares. Classes, shares being the same thing. Then we have retained earnings slash deficit. So retained earnings is essentially cumulative net income retained in the business. So however, if we keep operating at a net loss, then our retained earnings is going to go into a deficit position because we're earning a negative position, meaning our expenses are higher than our revenues. So retained earnings is our net income minus any dividends that we pay out to shareholders. Remember, dividends is a payment we make to our common or preferred shareholders saying thank you for investing into our company. However, dividends is not an obligation unless we declare it as a company. So there could be other shareholders' accounts. However, for now, we're just going to deal with the share capital and the retained earnings account. So the way it kind of looks like is like this. So we have common shares beginning of the period plus any common shares issued or sold. That means we sold it or issued it for cash. Now, let's just say we have excess cash laying around. We have extra cash laying around. We're like, you know what? Let's go out and repurchase our shares. So we're, in this case, are reducing our cash, but we're also reducing the ownership stake of our business that's been given to other people. So once again, common shares beginning of the period plus common shares issued slash sold minus common shares repurchased gives us common shares end of the period. So usually a period in accounting is a fiscal year. However, most fiscal years follow the calendar year. So a fiscal year is any 12-month period. So it could be March 1st, year 1 to March 1st, year 2. Correct? However, most companies do follow the calendar year end, this January 1st to December 31st, one day before January 1st, year 2. However, some companies may follow their own fiscal year period. So if you see, for example, on the financial statements or a question, it says March 31st, for the financial statements, don't let that trip you up because companies are allowed to do that as long as it follows a 12-month period. Now we have essentially the retained earnings. So retained earnings beginning of the period plus net income or loss minus net loss. So remember, this net income comes from the income statement. That's why we have to do the income statement first, and then we do the statement of change in equity. So we have retained earnings beginning of the period plus net income minus dividends declared. It can either be minus dividends or dividends declared equals retained earnings end of the period. So now we're going to do an actual example. So this is a formal financial statement. I highly recommend that you pause this video, get a piece of paper and write this out word for word so that we can learn it and kind of figure out where the numbers are coming from and just kind of figure out the formatting of it. So once again, we have a three-part title. We have the company name, the statement name, and the date. As you can see now, the three-part title is equivalent for all four statements: the company name, statement name, and for the date. So the date in this case is for the month ended October 31st, 2018. And now here we have four columns. We have one for the actual descriptions. We have one for common shares. So this company does not have preferred shares. So a company does not have to have preferred shares. They can just have common shares, or it can have just preferred shares. So in this case, this company has common shares, it has retained earnings and total equity. Another word for equity is shareholders' equity. It's the exact same thing, or even owner's equity, exact same thing. So since this is the first year of operations, our beginning balance on October 1st is 0, 0, 0. And as you can see, the dollar signs. So the dollar signs pretty much tell us that everything in this column is going to be dollars, right? That's for each one. So over here now, we're going to add the issuance of common shares. So this company issued 10,000 common shares. This only impacts the common shares column. That's it. This has nothing to do with retained earnings. So to calculate total equity, for example, for the balance on October 1st, we're going to do 0 plus 0 equals 0. For issuance of common shares, we have 10,000 plus blank equals 10,000. Now we have net income. So I'm going to show you guys something right now. The net income of 11,042 actually comes from the income statement that we prepared already. So the net income from the income statement is 11,042, and this has nothing to do with common shares, so we leave that blank. Then we're going to take dividends that the company declared throughout the year, which is negative 500. This is negative because now we're losing value in our company. Remember, dividends is a payment to our shareholders, which is going to be in the form of cash. So we're going to subtract the dividends declared. So essentially, in this case, 0 plus 10,000 is 10,000. In this case, 0 plus 11,042 minus 500 is 10,542. And remember, to calculate the total equity, we do 0 plus 0 is 0. 10,000 plus blank is 10,000. 11,042 plus blank is 11,042. Blank plus negative 500 is negative 500. So now to arrive at total equity at the bottom, either we could do 10,000 plus 10,542, which is 2542, or we could do 0 plus 10,000 minus, or we could do 0 plus 10,000 plus 11,042 minus 500 is 2542. And as you can see, we have underlines, because remember, 0 plus 10,000 underlined is 10,000. 0 plus 11,042 minus 500 underlined is 10,542. And then once again, the same pattern over here. And these over here have dollar figures and double underlines because these are the final figures of the statement of changes in equity.